First, a little bit of history about candlestick charting. The Japanese began using technical analysis to trade rice in the 17th century. Much of the credit for candlestick development and charting goes to a legendary rice trader named Hama from the town of Sakata, Japan. Contemporary candlestick charting first appeared in the West around the mid-1850s, and it's likely that Hama's original ideas were modified and refined over many years of trading, which eventually resulted in the system of candlestick charting that we use today. Now you're probably wondering, why use candlestick charts? Here's an example of a dot chart. All it shows is the close of each day, and the color red for a down day or black for a positive day where the stock went up. Not a whole lot of information there. Okay, then we go to a dashed line. Now that's a little better. It's still showing down as red and up days as black dots, but it really doesn't give a whole lot of information either. Just like that, you know, the solid line shows the trend. Doesn't really clearly show what happened on any given day, because that's a whole week right there. I only see one, two, maybe 3 days, 3 changes there. Okay, so solid line isn't that great, and area is just a variation of the solid line with a dark background. Okay. Finally, somebody got smart, and they wanted to see the open, high, low, and close on the day, which is exactly the kind of information you need to make candlesticks with. The only difference is all they show here in the OHLC is, was it a red day or was it a green day? Did the stock close up or down on that particular day? Okay, so let's take a look at what OHLC means. I'm going to zoom in right here so we can get a better look. Now this candlestick right here is the one I pointed to on the long-term chart. Okay, the open always starts with the left. This is the little thing that sticks out to the left. That means the open. The open's on the left. The high of the day is the top of the line. The low of the day is the bottom of the line. And the close is where it sticks out to the right. Here is what candlestick charts look like next to OHLC bar charts. Okay, as a trained observer, I see things like, oh, what a beautiful day. Nice green day, breaking out almost above resistance and just really strong. I wonder what the volume was. And to look at it down here, it's not real clear. Okay. I also see a couple of reversal signals in this area that could have signaled the reversal of trend that aren't readily apparent here. Okay. So OHLC was a real good idea. Candlestick charts ups the ante by 10, and it shows you what a beautiful day there. Oh, nice doji at the bottom. Oh, what a terrible day. It's really hard to see the kind of things you can see here, okay, using candlestick charts. So if you're just starting your studies of technical analysis, I highly recommend that you start using candlestick charts right from the beginning. This is how you read a candlestick. It's made up of 2 parts. The body, also called a real body, and the upper shadow, lower shadow, which I call wicks, like a candle wick. Okay, so on an up day, the open is the bottom of the body. The low of the day is the bottom of the lower wick. The high of the day is the top of the upper wick, and the close is the top of the body. On a down day, the open is the top of the body. The high of the day is the high point of the upper wick. The low of the day is the low point of the lower wick, and the close is the bottom of the body. Now, as I've mentioned before, StockCharts.com thinks candlestick charts are the way to go. When you click on any link here, well, let's look at Apple. Okay, you're going to see candlesticks on their default view. They also find them so important that when you go to the links section in this blue box right here and click on predefined scan results, not only will it give you a number of technical indicators that are giving signals, but you will also see a whole section on candlestick patterns. Okay, you have bullish reversal patterns, bearish reversal patterns, continuation patterns, single candle patterns. Now, I don't know what Ichimoku or Elder Bar patterns are, so we'll just cover the ones that are most commonly used. Now, I like candlesticks because in a single day on a daily chart, one candlestick can show a potential reversal of trend. Now, one of the most common reversal signals is called the doji. Okay, it's basically a day where the open and close are very close together, centered in the middle of the upper and lower wick. Okay, on this day, the open and close was exactly the same. This was a slightly down day doji, and this was a slightly up day doji. Now, dojis not only signal a potential reversal of trend, they can also be considered as possible continuations. So if a stock is in an uptrend and you see a doji, it may not be a reversal signal. It just might be a day of indecision, and the trend will continue. One of the next most common types of candlesticks is the hammer and the hanging man. Now, the hammer is a bullish signal that is usually found after a long downtrend. When you see a hammer at a bottom, especially surrounded by a couple of dojis, that could really mean that a bottom is put in. Okay? Now, the hanging man is actually on the left here. It is also a reversal signal that is found after a long period of uptrend, and it can signal a reversal of trend to the downside. So here is the hammer. After a long period of decline, and you see this hammer, generally speaking, it's a bullish sign to see a hammer after a long decline. Now, the third most common single candle reversal signal out there is an inverted hammer, or more commonly called a shooting star. And shooting stars are really good reversal signals after a long uptrend. Whenever you see a shooting star like this, all by itself above all the other candles, take notice, because a reversal is quite possible. Like hammers that are good for showing a reversal of trend after a long decline, shooting stars, which quite often show a reversal of trend after a long rise in the stock price, and the long-legged doji all by itself at either a top or a bottom can be a really good single candlestick reversal signal. Like one of my favorite patterns, the engulfing pattern. This is a bullish engulfing candlestick because it completely covers the entire body, upper and lower wick of the candlestick before it. This is a bullish sign in a downtrend. This is a bearish, fully engulfing candlestick because it totally swallows the preceding candlestick. And this is bearish in a uptrend.